Morning, Bill here with the Metals Minute. Today is Wednesday, February 1st, 2023. Well, we have all four of the metals a little lower for the week, but 3 out of 4 are higher for the year, and all the details are in the write-up. We have some things happening today. Today is the vaunted FOMC policy meeting and interest rate decision announced beginning at 1 p.m. Central Time. So we'll keep an eye on that, but most pundits are expecting a 0.25% interest rate increase. So we'll see if that happens. It's possible he could shock at 0.5%, but I think 0.75%, which is the last few increases, is off the table. So it'll be somewhere between 1/4 and 1/2, most likely, but we'll know in several hours. We also have gold increasing in demand at the highest level since over a decade in 2011. And part of that is driven by central bank demand. The amount of gold purchased by world central banks is the highest level since 1967. And what's important about that is the last time we saw central banks purchasing gold at the same levels that they did in 2022, it prefaced a major shift in the world financial order. You know, you hear talk about a financial reset. Gold is usually involved when that happens. And the last time we saw gold being purchased at the rate it's being purchased by central banks, that's exactly what happened. Shortly thereafter, the dollar became unpegged from gold and began to float freely. And as you're aware, what that meant is the value of the dollar began to float downwards in relation to gold. So we may see that happening again if history is any guide. There's also some important information that is feeding into this narrative, and I believe will keep it alive for a while, and that is, over the last 40 years, the average amount of gold owned by Americans as a percentage of all assets was 2%. In other words, 2% of all the investment assets owned was gold. Today, that number is less than 0.5%. So just to get back to the mean over the last 40 years would require an increase in the value and demand of gold by 4 times. So even if it only goes half that much, now that can happen 2 ways. Number one, it can happen by the value of other assets going down in price, and by the value of gold going up in price. I believe what we'll see is likely a combination of those two, to where gold will approach the equilibrium amount of 2% of the value of assets owned. So we may see the value of other kinds of assets come down as gold is coming up, to get back from 0.5%, below 0.5%, up to 2% of total assets. So this is a good time to be positioned in gold and precious metals. And at a recent conference in Vancouver, precious metals conference and mining conference, some of the mining investor legends are saying that this is a great year for all metals. Precious metals, base metals, they just see it as a good time to be having a position in all metals, especially precious metals. So there's a lot of things at work out there. There's mining restrictions. There's a lack of new finds out there in the mining world, and a lack of extra capacity while demand is increasing. So it's a good time to own precious metals. There's a lot more happening. Stay tuned. We look forward to seeing you again soon. Thank you for tuning in.